Welcome to Forex Mechanics. Welcome back. This video I am recording specifically because I had recently ran a survey, and I did notice in the survey, based on multiple traders who had filled out the form, what I had typically noticed is that most of them had responded with the one common problem, that was consistency and also discipline. Now, while discipline and emotional management is a separate topic altogether, but at least as far as the consistency is concerned, that is something that you can take care of by looking at some very basic, simple, by just looking at some very simple indicators. Now, what I've done in this screen is that I just have two indicators, right? These are just two simple um, exponential. I'm sorry, these are two exponential moving averages. One is a 5 exponential and the other one is a 12 exponential. Now, how does it help in consistency? You can see on my chart, on my screen, I have three time frames. Now, in this case, it is the pound yen. And you can see this is the 5 EMA and this is the 12. So the light blue is the 12 and the green is the 5. You can choose colors of your choice. But if you notice here, 5, 12, and I have three time frames here, which is daily, weekly, and monthly. And what is the one common thing that you can see is that on all three time frames, the trend is up. By trend is up, I don't really have to say much about it. It's very visible to you in front of your eyes that on the monthly 5 is above the 12, weekly 5 is above the 12. So it's above the 12 on the daily as well. Now, what this does is this basically helps you with the consistency part of it. In fact, to a very large extent, it will even help you uh, in your discipline, right? It will also help you take less number of trades. So let's say, based on whatever strategy that you're using currently, if you at the bare minimum ensure that you're trading in the direction of the daily trend, you will see that your results will improve almost immediately, right? So, for example, let's say if you're using a very simple strategy like an EMA crossover, right? So, let's say if you're looking at 10 EMA crossing the 20 in the upward direction, and you're going to make sure that the direction is the same on a higher time frame, then the chances of you winning the trades are much higher compared to looking at just 5, 15, 30 minute and 1 hour, right? At the minimum, what you should be looking at is the daily, right? And the more higher you go, like you're looking at the daily, weekly, and the monthly, the better off you are. Okay, so if you're looking at the daily time frame, the weekly time frame, the monthly time frame, then of course the chances are very high. Now, monthly at times can be a little too overextended. So even if you use, let's say, if you're on H4 here, and if you're on daily here, and if you're on the weekly here, then the chances of you winning becomes much more higher. So here you can see this is the H4, this is the daily, and this is the weekly. On the weekly, you can see the trend is up, the daily trend is up, and here you can see this is the zone that you would have been trading long on. And right now, if you see, price is moving sideways, right? But the overall trend is up, correct? So, irrespective of whatever strategy you're using, if you at the bare minimum look at the daily time frame, if I shift this to 1 hour, this to the 4 hour, and this one to the daily, you can see at the moment, and since the last 3 days, 1, 2, 3, there hasn't been much action on the pound yen. And similarly, if you see on the H4 time frame, it has been in consolidation and it's quite visible on the 1 hour chart as well, right? That there is nothing really been happening. So just by shifting to 1 hour, 4 and daily, you can see how the trend looks so different, right? Just by this simple, even though the trend is up on the daily, but just the three candles create so much confusion on the 1 hour. Can you see it? On the 1 hour, there is so much confusion. On the 4 hour, there is confusion, even though the daily trend is up. But if you notice, this is the zone where you should have been trading. Now, this is typically start of the week. Um, yep, this was start of the week on Monday, Tuesday when yen was very weak, which resulted in strong moves in most of the yen pairs. So now here you can see if you're looking at the 1 hour. So let's say if I'm looking at crossover of, in this case, 5 and 12 on the 1 hour, and you can see all the time frames were going in the same direction, then your chances of winning are higher. So what I'm trying to tell you is that at the bare minimum, you should trade in direction of the daily. But if you really switch to daily and weekly, then the chances of you getting really good trades becomes really high. Okay, so this is the weekly time frame. This is the daily time frame. Now I have the H4 time frame. So now here you can see it's much more clear. Now trend is up, trend is up, even though you can see the last 3 days price was overextended from the 5 EMA. You can see here price was way above the 5 EMA, then it pulled back into this 5 EMA while the trend on weekly is still up. And you can see on the H4 it is consolidating. Now, of course, I use my own system where I use a bunch of indicators to understand how to get into this zone here when price is taking off. Of course, it's got to do with currency strength and weakness. But this video is not about discussing my strategy and currency strength and weakness. This is simply to tell you that only by shifting your focus, and this is a very simple method. You don't really have to look at fancy indicators. All we have done is we've used two exponentially moving averages, 5 and 12, which are relatively fast. So, it gives you it will show you clear directions, especially when you're looking at daily, weekly, and monthly, right? So you can see daily is clear uptrend, weekly is clear uptrend, H4 is also an uptrend. Currently, there is nothing much happening. But if you ask me what is the trend for pound yen, just by looking at the chart, I will say yes. I will look for going long again. Now, by simply analyzing this, let's say if the pound falls in the next week, or if yen becomes strong, then probably you will see price coming down to this level here. And then, maybe from somewhere here, it will start resuming up again, right? But then again, that is based on real time currency strength and weakness. But if anybody asks you what's your bias for pound yen, I would simply say my bias is long, right? So this really helps you in the consistency part. This also helps you in in terms of discipline. If you are based on any strategy that you're trading, if you are just disciplined enough to make sure that before you enter, you check the daily and the weekly, you will see over time your results will be much better, right? This just by putting this one filter of checking daily and weekly, just by these two filters. So at the bare minimum, check H4 and daily, right? This is the bare minimum, H4 and daily. Even better, you look at daily and weekly. This is a very simple profile I've created where you can, whatever currency pair you're analyzing, you can paste it here. So let's say I use NSD USD. You can see here the you can see on the weekly the trend was down and price was moving up since the last 3 weeks. You can see here on the daily the trend is clearly up. So this is when the EMA is crossed. This was basically the New Zealand dollar interest rate news. So this is something that you would not be able to catch because this happened very early in the Asia session. So most of the traders who are in US, Canada, UK, this is very late in the night. So we wouldn't have taken it. But then yes, from somewhere around here, if you see the trend is still up. Now, mind you, I am simply looking at the daily. I'm not even looking at the weekly, while weekly EMAs are yet to cross. But just by looking at the daily, and because the New Zealand was very strong, you can see this move that from this point, it is still carrying on in the same direction, right? So you can see this is the New Zealand dollar news, and you can see right from here, price pulled back and it's still going in the same direction, correct? So this is a very simple technique that you can use. It's not rocket science. Just to exponential moving averages relatively faster, and because it is fast, that's the reason why it works better on daily, weekly, monthly, right? So if you personally ask me, it is best on daily, weekly, and monthly. But at the bare minimum, at least make sure you're trading in the direction of the daily. That is the bare minimum. So if you see anything like this where you don't see clear separation of the EMAs, like in this zone here, just don't trade. Right here, don't trade. But yeah, when you look at daily and weekly both in the same direction, then your chances of winning becomes much more higher, right? So again, to reiterate, the bare minimum you trade in the direction of the daily, but for better results, look for trades or look for entries in the direction of the daily and the weekly, right? So I hope this is just a quick video that I thought of making using moving averages, um, and how you can probably apply faster moving averages on higher time frames. I've left a link in the description in case if you're interested in knowing how I trade. You can fill in the survey. It's a small questionnaire. You can fill it, and I'll be more than happy to respond to you. Thank you. I'll see you in the next video. Bye bye.